In this video, I'm going to go over how to use the Launch Point Trading Signals Algo, the VIP membership Algo as well, all the same thing. Okay, first thing we're going to get into is the divergence. MYM, or the Dow. All right, what does that mean? That's just asset correlation divergence. How do you see that? You can also see it up here in this little indicator box. It all has the ES and the Dow. Of course, they're micros. And one, as you can see, it's 9%. The other one is 4%. That means that price is moving up in those two assets slightly faster than it is to the NASDAQ. Okay, how would you frame an entry? Let's go about seeing how we would frame an entry. All right, as you know, I teach market structure. The blue area is a strong area that I feel very interested in price breaking through, which of course it did, as you can see on the chart. Most of all, it's been a good bit of time there. 1, 2, 3, 4, I guess you count that area as a whole, and then 5, and then a break up. All right. Excuse me. And again, I'm going to bring your attention to the divergence, and the tiny little arrows are just letting you know that something's going on different than normal, and to take a look up here at the swing high and the divergence amount, 9% and 4%. All right. When you see the maximum selling, that is usually a good indication of the swing low. And if you have a market structure and you have the good swing low and you have the selling, well, that's when you switch over to your quant tower and take a look at your order flow. And sure enough, you would take a look at the exact same time, which I have noted here with the arrow, and you have 310 on the delta to the buy side. And what does the price do? Absolutely rips up at around 3 o'clock-ish. And that is how I go about using both sets of indicators, both sets of algos, and how you would go about using it in conjunction with the order flow and principles that I teach live every day on YouTube. All right, I'm going to go over another scenario and bring your attention to it. When would an area be considered kind of oversold? Take a look at that. That little pink reddish arrow. Anytime you have a huge amount of volume and that little arrow significantly more than anywhere else, you can just about conclude, provided you can take a look at your order flow, that probably going to be a pullback. And what does it do? Let's slide over here to the wick. That's exactly what it does. It pulls back at around 355. So when the indicators are used in conjunction with the order flow, you create a narrative. In other words, you create as many possibilities of statistically favorable outcome in terms of trade direction. You want as many confirmations as you can get. Of course, it has to be done in a timely manner, but you have to be very strategic whenever you go about analyzing it and framing it and reading it. And that's why the algo can be very useful in the Discord that's free for YouTube VIP members. And this is exactly a way to use it. All right. And generally, the lines at the very top can also give you a little bit of a hint. The red and the blue are basically your stop loss areas, considering you're trading very small, like a 1 to 3 micros starting out that I teach. Of course, your risk management is always up to you and dependent on what size you start your trade with and how big of a amount that you trade with. And of course, your risk management should always be followed. All right, I'll bring your attention to some other colors on the chart. We'll slide back a little bit. All right, you have a nice consolidated range here. Obviously, price did it strictly to take out both sides, which it pretty much did on the last move. And if you study my Elliott wave videos, 1, 2, 3, 4, 5, 6, and then fail 7, and then you're 8. Took out both sides. The buy side liquidity, the sell side liquidity. And again, you had divergence over here, already letting you know that there was something fishy going on. Pay attention to it. Anytime you see any kind of divergence, all right, here's one for on the top side, divergence for the ES. Of course, I showed you the one earlier on the Dow. And the gray just simply means beware, be careful, and really study your order flow and analyze and make sure that you're real confident in your ability to read it in terms of your trading decision. It's always best, if you're not good at trading consolidated ranges, aka chop, to sit on the sidelines until it breaks both sides to know, or even takes out one side or the other of the range before you take a trade. Like if it takes out the high side, or you take the short, theoretically. It takes the low side, of course, that would be the long. And all the colors, if they're green, obviously it's bullish. It doesn't mean it's going to stay bullish. It can change at any moment, of course. But anytime you see the gray or white, sometimes it's white if it's certain characteristics in terms of doji, equal volume, equal selling, that sort of thing. But the gray will let you know that there's slowly change taking place. And what's taking place? That's the institutional traders creating basically a bear trap right through here. All they're doing is selling to all the people, all the shorts, the greedy shorts, you might say, the greedy bears that think it's going to continue down for another 2 or 3, 4 or 500 points, and it just reverses on them. But that's how the market works. Okay, last thing I'm going to bring your attention to, and I know I have a lot going on here, are all the lower volume spikes, which are pretty self-explanatory. Whenever you see a high one, well, you can usually see something afterwards, usually a pullback, or if it's really low, then you see a big move up. Not always, but what is very important is this RSI. It's a very highly tuned, modified RSI with a lot of other things in it, but just know that it can signify an overbought or oversold area. And again, it starts getting flat across the top. That's when you want to think about really thinking about, if you're long, possibly taking a profit. If you miss the long, maybe think about taking a short, because it's starting to get way too overbought. When you start seeing these real high ranges, the 90%, that lets you know, that's basically telling you the 90% saturation in terms of volume. So anyway, I hope this video is helpful, informative. If always feel free to ask questions on stream, in the chat, or in the Discord. And thank you very much for watching. And if you like this sort of content, always feel free to like and subscribe. And thank you very much.